All right, everybody, welcome to Bitcoin Billionaire. Today we are talking about how to get a high ROI and the best indicators that you can use to predict a price. Very excited to be here. All right, welcome to Bitcoin Billionaire. How to 100x without losing money plus free money. Join Bitcoin Billionaire. Okay, welcome everybody. So very excited to be here with you. And we're going to talk about something very interesting today. And what we are talking about is indicators and why that's important for you. Okay, and so let's talk about that. Right, okay, so let's talk about that right now. Let's go to the PowerPoint. So I have a PowerPoint today. Okay. All right, welcome guys. How are you feeling tonight? All right. Good. There's no giveaway today. No, none. Okay. Okay. Anyway, so let's start, guys, about best indicators. And if let's move that up a little bit here. Okay. So feel free, if you're brand new, to subscribe to my YouTube channel. We are giving away free money for people who are going through a tough time during the coronavirus, or for whatever reason you're in some part of the world that you need money. We are giving away free money. Subscribe, put on the indicators, so we're here to help. Okay, so please do that. Or if you just want to learn how to trade, then subscribe to our channel as well. Okay. Today we're going to talk about top 4 indicators. Okay, welcome, Davey. We're going to talk about 4 indicators: moving average, okay, RSI, MACD, and OBV. So welcome everybody. Smash the like button if you want to learn about indicators, okay, because we are here. Okay, if you don't like it, you can give me a thumbs down. That's fine too. Okay, but here we are. So we just had joined our Telegram group as well. Had an interesting conversation there. A lot of drama. So I'm going to give you the link so you can join our Telegram group, where a lot of drama today. Was really fun, but at the same time, a bit of a debate. So if you don't mind that, then join the group. We do teach and give a lot of tips there. So make sure to join, guys, our Telegram group. Welcome, guys. Welcome, Deadeye Aziz. I don't know if I pronounce that. Okay, let's get started. So just like an airplane pilot has indicators, right? When you're flying an airplane, you need all these dots here, right? To be able to fly. And if you don't have that, hold on, I need to turn something on here. Where's that screen brush? Okay, so we need to have these, go back here. Sorry about that. So go to here. So as you're an airline pilot, you have these indicators that lets you know if you're getting closer to your goal or further away. Pilots have a lot of indicators, as you can see, everywhere on here and down here. I don't understand any of them because I'm not an airplane pilot, but I understand that they do need indicators so they don't crash and so they can get to their goal. They can get to their destination, right? That's very important. Welcome, WC. Good evening from the Philippines. Welcome. Okay. Yeah, welcome everybody. Welcome. Renai will come back. Okay, one person who agreed with me on the Telegram channel. Okay, I think I had a few more, but anyway. Good morning from Fiji. Welcome. Right. So what is a trading indicator? Now, I don't know how much you know about trading. If you're brand new or you're an experienced trader, this would be a good for you to learn that, because as you learn about trading, you need to really understand a few principles. And that first one is simply this, that trading indicators are mathematical calculations, which are plotted as lines on a price chart and can help traders identify certain signals and trends, okay, within the market. So basically, in short, all we're trying to do is predict what the price is going to be. So we're trying to create a price chart to see if the price is going up or is it going down. Basically, that's all we're trying to do here. I'm doing good. Thank you for asking. I'm in a beautiful state. How are you doing? Are you in a beautiful state? Okay, we really believe here in the beautiful state. Live in a beautiful state no matter what in life. Drinking some beautiful state water, right? And that's the most important part. I always say you can't do nothing in life if you're in a suffering state, your fear or your anger or your, I don't know, just not feeling good, you know? So you got to really make sure you feel in a beautiful state. So I hope you guys are all in a beautiful state. Thank you for joining me. So, right, becoming a millionaire or billionaire is a math game. And I understood that way before I became a millionaire. That was one of my first understanding, that they don't do it by chance. They use math in order to become rich. And that's one of the big point we're going to learn. So let's start with very simple stuff. Moving average. So what is a moving average? Moving average in finance is a moving average, MA for short, is a stock indicator that is common used in technical analysis. And the purpose, why is it important? Because the reason this is important is because we can smooth out the price over a specified period of time, which I will explain to you what time is that, and by creating a constantly updated average price. If you don't know what the average price, let's say you're like, a lot of people will always ask me, they say, Michael, what do you think of that altcoin, right? And the reason they're asking is because they don't know if they're buying it at a good price or not. So they're wondering, like, how do I know that's a good price or a bad price? Is Bitcoin a good price right now, or is it a bad price? Is it a good deal or a bad deal? So I think a lot of people get into trades not understanding whether it was a good price they bought at. So that's the problem. And then obviously, if they don't understand, they may just jump and buy something based on all the excitement because the price is going up, right? It's going up the charts like a really good price, but they may not understand if it is a good price or not. And how do you know? So let's talk about that. So we can look at 3 MAs today. Okay. So hi from Nigeria. Okay. Okay. Hi Babar, Sunny, welcome. Okay, let's look at 3 today. First one is 20 MA. Second one is 50 MA, and then 200 MA. So I will have to bring the chart. Okay. So let's see. Now, if you don't know how to use charts, I do recommend that you can go to tradingview.com. You can even download the apps. So let's look at Bitcoin. Now, how is Bitcoin doing? I don't know if you understand the answer to that question, but maybe you don't, right? Maybe you don't know how it's doing, or maybe you think it's not doing good or it's doing great. I see a lot of people have different opinion on that, right? So let's use this. Okay, let's just go to this one then. And we'll go to the full chart. So you want to open that chart, right? And then I'll just change it here. BTC, USD. I always want to look at which exchange am I looking at, because you get different price. So you want to use tradingview.com. Choose the exchange. You can choose, there's many. There's Binance. If you don't have, if you're brand new, you don't have an exchange, go to our description. We have a link for you there for Binance to open a trading account if you're brand new, right? So let's open this one, and let's just take everything out for now. Just clear that out. I'm just gonna clean it out first because there's already a lot of stuff open. Right, so here's the chart of the Bitcoin right now. This is an active chart. Its price is 48,753. Is that good? Is that bad? Right? Like a lot of people may not know. So in order to help you understand, okay, we are going to show you the MA technical analysis. Now you can do this at the same time if you're at a computer. If not, then you can watch this video again. But basically, you will go to this little F on top here, okay? And they're saved on my favorite, but in order for you to understand, I'll put MA, and you can put 2050, okay, like that. And then you can open it, okay, and there's open right now. And then we're gonna see like these lines, 3 lines, because there's 3 indicator. But we don't wanna see it on the 1 hour, we wanna go to 1 day. Go to 1 day, okay? Now we'll have to, there we go. So now we have 3 lines. I will explain to you what these lines are and why they are important. Feel free to ask questions as I teach you here, right? So the first line, the green line here, is a 20 moving average. It means 20 days. If you're in a 1 hour, then it's going to be 20 hours. That's not going to be accurate. So that's why we want to go in 1 day, okay? So as we can see, right now, the price is below the 20-day, right? Like it went all the way down. It didn't hit, and this is important. If you don't understand this, this is very important. When it went down, you can see it went down, all the way down, but it did not hit the 50-day. Now, why is that important? If you look back in the past, right, and you go here, we also had a strong correction, right? It went like this and then went down, and it did hit the 50-day. But after that, it rebounded, okay? And then we had another correction now. And now it's just starting to go up. So why is that important? Well, there's a lot of reason why you want to look at the 20-day average and the 50-day and even the 200. That's the 200. So this is the 50, the red one. So because you don't want to panic. What I mean by that is that a lot of people panic when it goes down. But it's very normal, and I want to let you know that, very normal for the Bitcoin to have a correction on the 50-day and then bounce back. So that's not a big deal. This is very normal. You shouldn't be panic about that. You shouldn't be afraid about that. So what I see though is a lot of new people to Bitcoin, and maybe even old people who don't understand the trading indicators, and they panic when they see this, and this is absolutely nothing to worry about. However, if it break this and it keep going down, then it could technically keep going down to the 200, which would mean a Bitcoin price of about 24,000. Now, you can't see it. Let me move it. Let me move this just a little bit here, okay? So that would not be good if it went all the way down, because then it has a long recovery time. Now, it has experienced that in the past. So if we were to look back in the past, has it hit it? Of course it has, right? So you go back, there are times in the past where it absolutely hit it. Right here is one example, right? So that's when the price was very cheap. So what we mean to say to you is, like, a lot of times we don't know if it's a good deal, but let's say that Bitcoin went all the way down to the 200 moving average. Hey, that's a good buy right here. That means the Bitcoin is so cheap. I don't think it's gonna get there, guys. That's why, like, I bought it here because I had a feeling this time it wouldn't even touch this, even though last time it did. So here it's a good price, okay? Here it's a good price. So you get what I'm saying? Like, one of the things people don't know is what's a good price, what's a bad price. So when it's above, right? When it's above the 20-day average, you will expect some correction at some point, because that means that it's above the average price in a 20-day movement. So anytime it goes too high, it has to go back down. Does that make sense to you? Like, you can see, right? Here we are moving along the 20-day average. Then it goes on top of it. Then it goes very far from it. The further it is from the 20-day average, the more it has to come back to it. It's like think of it as a magnet. You know, this green line's like a magnet. You know, or breathing out, breathing in, breathing out. Has to breathe out. Sometimes it takes a deep breath. So, but here's the thing. In a bull market, we use primarily this green line, but in strong corrections, we will go all the way to the 50-day moving average. And in very strong, we would even go down to the 200-day. Okay, so that's one major indicator. Let's go back to the presentation here. So does that make sense? Any questions about that? So as I said, we're looking at 20 days, 50 days, and 200-day moving average. I just taught you. Okay. So as you learn about trading, one of the things that I want you to understand is that, well, you know, you have to look at more than one indicator. Otherwise, it would be too easy, right? So the more you learn about indicators, the better trader you're going to be. And that's why I'm teaching you this tonight. Okay, so let's go now to RSI. What is RSI? RSI is intended to chart the current and historical strength and weakness of a stock or market based on the closing price of a recent trading period. So to simplify it, all it means is it a strong or weak? Is it a good price to buy or a bad price to buy? Okay. And he says, my birthday. Oh, tomorrow's your birthday. Well, happy birthday in advance to you, my friend. I hope you have the best year of your life. Bless you. Why is RSI important? Well, it measures, there's a lot why it's important, but it measures the magnitude of a recent price change to evaluate, and this is the big point, is it overbought or is it oversold? Okay, the conditions in the price of a stock or other asset. So here we're talking mainly about crypto. You could use this, of course, for stocks or any chart. Okay, so let's look at the RSI right now. So you can see what's going on with the Bitcoin. By the way, you would use this with pretty much anything, like any altcoin. Okay, we could do this with Ethereum. We could do this with stocks. As you see here on the left, these are the stocks. I own Tesla, I own hotels, I own Google. So I own many different kinds. So whatever I own, I just put on the left here. Let's look at this for one moment, okay? So let's close the MA. And then you're gonna type RSI. I have it here, relative strength. But if you type RSI like this, you will see relative strength index. This is on Tradingview. Okay, it's free. You can have a paid account. I have a paid account. And now what we want to look at, we're looking at the day view here, just so you know. Hold on, I didn't press it. So let's close this. Let's go back. RSI. There we go. Sometimes you double click, it opens twice. Okay, guys, this is the RSI here. And I will explain to you first what it means, okay? So inside this purple place, it means that its price is acceptable, okay? It is acceptable price. But if it goes on the top, that is mean it's overbought, like too many people bought it, and it could be too high. Okay, like if you look before the crash here, right? Look at the top. This is right at the top here. You see that? And yeah, so if you look right at the top, you can see here that it was already overbought because this chart went all the way up. It went like this, right? And now starting to be overbought. And then there's a correction. Okay, same here, right? If you go here, right, it's going up, and then it's starting to be overbought. And this is normal for Bitcoin. Bitcoin constantly it will move above this line here because it often trades. But here's the problem: many people don't understand this. So when it's overbought, they're not careful. If you buy Bitcoin here, not a good idea. Not a good, because then it's going to crash. So when you see this on your RSI, you should not buy. You should wait a bit until a like correction. And I wouldn't use, by the way, I wouldn't use the day view to buy. I would use the 4 hour because then it's clearer. If you can see here, like when is a good time to buy? Whenever that it's, hold on. You see here, when it goes below 30, that means it's probably a good time to buy. Okay, now there's a lot to learn about that, but if you buy here, it's going up. Does it mean it won't crash again? No, but we can see we're all the way up here now, and a lot of people are asking, is it going to go up or not? We don't know, because if you look at the price history, that's why you don't only use one indicator. If you look back, right, this is a 4 hour, right? So you can see here, right? Here we are on the 4 hour in the last one, right? And it went all the way up, right? And then you see here, it's saying to you that it's overbought. Actually, it was overbought here, but it did not correct very strongly, just a little bit. Actually, we'd have to zoom in. This is correction. There's two correction along the way. So one was here and there. So you can see here, it's overbought, right? And going there and then there, overbought here, and it corrects. And it didn't go all the way down. These are very small correction, but then it went all the way again. So all I'm trying to say to you is, like, when you start to, you can't just look at this and know it's going to have a crash, Because a lot of people asked me, they said, how many of you were here when I told you the Bitcoin would crash? I think, Dave, you were one of the first ones following me, and I told you, I warned everybody. I said, probably the Bitcoin's going to crash. So if we go to my YouTube channel, I had a video not that long ago. And if we go to YouTube and we go to the bottom, I had this warning, right? That I think was here where I talked about Bitcoin's probably going to crash. And how did I know that? You might be wondering. Like how did I know? Because every time Bitcoin crashes, you're going to see this kind of warning like this. So keep following your channel because I will keep telling you when that happens, because sometimes it's here and you shouldn't sell right away. Well, apparently you're talking about Ether, right? Or USDC or USDT. They're called stable coins, and they're meant to offset, because a lot of exchange, they don't allow you to exchange in US dollar. So you have no choice but to exchange in these stable coins. And there's a big fight on that, right? That USDT was supposed to be based on, they were fined because they broke some of the rules. So it's not 100% safe. I wouldn't say that. Whereas USD is backed up by the government. USTD and USDC is supposed to be based that for every dollar they give you, they have to have $1 US. But there's some speculation that may not be true. Okay. So, guys, any questions about this? Very important that you get that. This is the key to trading, to find out. Oh, when you see this, there's other things you need to learn. That's why you should subscribe to my channel. Make sure you follow us. I can keep teaching you. Go to Bitcoin Billionaire, subscribe to our channel, and follow us. And we keep teaching you this stuff for free, okay? Okay, let's go back to next one. Right, next one is MACD, right? MACD. And so what is MACD? So MACD is sort of short for moving average, convergence, divergence in a trading indicator. And it's used for technical analysis of stock price. It could be anything. Like we obviously use it for crypto, but obviously crypto is new. So before it was only used for stock price, but you definitely will use MACD to see a trend change, okay? Okay, I'll answer that question after. If I bought 47K price, what would you do now, right? Okay, I understand that question. I'll come back to that. I'll come back. Let's answer this question first. Why is MACD important? And there's a lot of reason why it's important, but the main reason is because many traders will rely on this indicator to measure the momentum, okay? If there's not a lot of momentum, then we need to know that, because it responds to the speed of price movement, okay? Secondly, indeed, most traders use the MACD indicator more frequently to gauge the strength of price to move than to determine a direction of a trend. So in other words, we're really using MACD to look at the trend. What is the trend? Are we in an uptrend or are we in a downtrend? Does that make sense? Are we in an uptrend or downtrend? Okay. So let's show you, and then we'll go to that one after. Show you what that means. Yeah, energy missing today. Okay. I don't know what you mean by that, but technical analysis is not always so energetic, right? Sometimes it's quite boring. But you need to know it, otherwise you're flying blind trading stocks or crypto. Okay, so let's MACD. So you can type in like this, MACD, like that. Okay, and then you will click this. Should pull it up. We can close this now, and we can even move that up a little bit. Oops. Right. So now, as first time you look at that, it seemed like, it doesn't make a lot of sense. What the hell is that, right? It's like hard to understand, right? But when you look at it, what you're seeing, right, is that as it's showing you like this is an uptrend. You can see it's going up, right? We're on the 4-hour right now as well, and that's a pretty good time frame to really look at what's going on. So you're on it's going up, so it's showing you that it's going up. But when it starts to go down, it shows you that it's going down, and you can see that when these two lines touch, you see that blue line and that yellow line, when they touch, it's letting you know that it's about to change the trend to a downtrend in this case. When it's a downtrend, the lines are below. When they touch here, they show you the trend was about to change, which it did, but not very much, just a little bit, right? And then it touched again, so it goes down again. And then it touched again here, which means that it went down, and it touched again here, and it goes up. Okay? Actually, let me zoom in for you. I think that you guys cannot see this, right? Let me zoom in a little bit, right? Just so, can you see that though, what I'm saying? That, right? So every time these two lines touch, it's a trend change. That's what it means. Why is that important? Because somebody is asking me right now, right? Let's go back to her question. If you bought at 47K price, what would you do right now? Well, define, like, you mean if I sell or if I keep it, right? So that's why we have these tools, because it depends if you're on a buy or hold, like what's your strategy? Yesterday, we went and we taught strategy, right? Strategy. Because if your strategy, and you want to watch that, okay, if your strategy is long term, I would keep it. I would keep it. If you're trying to make a quick profit, okay, then you probably should sell, and I'll tell you why, okay? Because we may experience a correction on the 4-hour, and what we're seeing right now, right, we need to, like, in the 1 hour is probably clearer. Let's go to the 1 hour. Let's go to 1 hour. You could use this for the 1 hour, the 4 hour, whatever you want, right? So you can see, like, it just told you we're on a change of a trend. But sometimes what happens, it's quite deceiving because it changes trend, but not very much, you know, like it already showing here that possibly it's not going to go down much. So actually, I don't know if I would sell right now. Good question. Because it's not really saying, like, look, it kind of went high, and then it's going down a little bit. And then it's stable, so it's not clear. It's a sideways movement. So maybe wait until it's a clear trend change. Yeah, correct. So as we use more than one, you become smarter investor. Same as a pilot wouldn't depend on just one indicator. They would use more than one, right? They need to know the height. They need to know the weather. They need to know the direction. Are they going the right? Yeah. So there are of course, there are other ones. Yeah. We try to do one a day. Try to schedule once a day. Okay. But do join our group. If you haven't joined our group yet, go to our Telegram group. A lot of drama there. Okay. Join our group there, and we will have a comment there a lot during the day. Yeah. If I had 100K, well, I have more than 100K, but thank you. Would you buy BTC? Well, I wouldn't need, if you understand what I'm teaching you. Listen, I didn't buy at now, okay? It doesn't mean I wouldn't buy now if you're just learning, but I bought it here, okay? Right down here, actually. That's where I bought. So it's not, let me take that out so you can see what I mean. It's not like, actually I want to keep the question at the bottom, okay? So we can still see it. So this question is, if you had 100K, would you buy BTC at this price? And first of all, I do have more than 100K. I trade with a lot of money, but I bought it, as I'm telling you, I bought it at the bottom, and now it's all the way up, right? How many percent? Well, let's look, right? Here we go. I bought it in the Rick candle here. Oops. Sorry, no, hold on. We'll measure the percentage. So from here, there we go. So from here to now, which is this candle, I'm up 12%. So because I'm up 12%, it's different than the other person who bought it. What price did they buy? Yeah, she bought it at 47,000. For her, she's scared if it's going to go down to 47 because she's up right now. She's up. She's 48,828. So she's scared she's going to lose. See, the more lower you buy it, the less scared you are. The lower price you buy, the less fear you have. Does that make sense? Then you have a lot more freedom. I don't need to sell it because I bought it at the bottom. I'm already up 12.8%. So I wouldn't sell right now for sure. For me, from my point of view. Her view, it depends what she wants, right? Because the problem is this. Let's go back here. Right? Actually, let's see. If she bought it 47. I don't know. She bought it here. She bought it this candle, let's say. Right? She's up 3.5%. Are you happy with 3.5%? I mean, some people are, some people, wow, I made 3.5%. Because you know what? Like a lot of times if we look back in the past, 3.5% is like the bond, right? Like you could buy a government bond and make 3%. Not right now, but in the past, right? So she just made that in one trade. But guys, I think she could do better. What you should be asking is, where do I think the price is going to be 1 month from now? Well, that's a good question. And I think that if you're patient and you wait, we can look at, this is going to go up. It's going to go back up. And we're going to go back to a new time high. We're going to break the 58,000. Let's say we go to 60,000 and she kept it. Those are better questions in my opinion. Okay. So right here, we'll go to here, right? Go sell it, let's say at 60. Then she's up 23%. How do you feel about that? But she have to be willing to keep it for a few months. And she also have to realize that it could correct more. It could go down more. It could go down to 41,000. In fact, it should have went down to 41 and it still could. This could be what we call a bear trap. A bear trap means that it's the illusion that we're going up, but then it like corrects. So if it corrects, then we have to look at different indicator. We have to go back and we have to look at the moving average, right? This one here. That's why we use both. So, and we have to go to the 1 day, because then I have to go back and say, if she doesn't sell now and the correction is not over and we're in a bear trap right now, then potentially she could go from here to about 14% drop. No problem if she hold it, right? If you hold it and you keep it, then you're going to be fine. There's no problem there. Only a problem if you panic and it's going down. Oh my God, it's going down. Holy shit. And then you just sell it. And then you lose. You're going to lose a lot because you bought it at 47. You get what I'm saying? So that's what people are not good at. They are not good at this part. Because, oh, I'm going to lose all my money. It's going to go down. It's not going to go down that far, guys. Okay? I cannot technically tell you the worst case is going to be 41K. But probability, because we don't trade on absolute certainty. We trade on the probability. So the probability is that worst case right now we're here. See, right now, if you look at it closely, we're kind of, there's a resistance on the 20-day MA. That's what it means. That's why we didn't break through. That's what's going on. Let's zoom in a little bit, right? That's all it means, really, right? Right? See here? See that green line? That's the 20-day MA. So what's going on? Why didn't we break through? Well, good question. But here's what's going on. It broke it, first of all. When we broke it, wow, I was sure we would go down here, but we didn't. Now, you might wonder, why did I buy it here? That's the $1 million question. Because most people are waiting to go here. But I decided to buy it right away. And I'll tell you why. There's too much good news right now. I don't believe with all the news, because news is a factor. You can't just use technical analysis to make a decision about whether to buy or sell. There's too much good news. You know, there wasn't a lot of good news as there is now when it went all the way down right here. When it went all the way down here, you see that? It did touch the 50 MA, then it bounced back up. Okay? But right now, there's too much good news about Bitcoin. Elon Musk just bought, right? Michael Saylor just bought. I don't know, man. I'm not saying it won't, but with all these good news, I don't want to risk it. I'm not one of these person who want to take too much risk. So what I mean by that is that because I don't want to take risks, I saw this as a good deal based on the 4-hour RSI. Okay, we're not looking at the RSI right now, but that's what I saw. Okay, guys. So does that make sense? Absolutely. A mix of RSI, MACD is great. But let me be clear. We don't want to limit to just 2. We want to have lots. Okay, depending on what's going on. Now let me go down because there's a lot of questions I didn't see here. Right. Okay, what specifically do you disagree with? Put in a comment. What do you specifically disagree with? Okay. Okay, I don't know what you mean by that. Okay, thank you. Thank you very much. Oh, really? Okay. Well, try again after. Okay. Okay, guys, I want to answer some good questions there. Here's my goal. I want to dream. I dream big. Others can make it. I can make it too. Yeah, of course. Of course. If somebody else can do something, so can you guys. Okay, so here's a good question. How can I get these indicators? They're the ones that I'm showing you are all free. I think, because I have a paid account, so I shouldn't say that, right? But first of all, you're going to go to tradingview.com. Okay, right here. You can't see it, right? So let me post the link on the comment. But basically, this is, I'm pretty sure most of these tools are free. Okay. Okay. So you can take out this C here. Hold on. If you go to that website, that's what I'm using to get it. Yeah. Okay. Okay, well, thank you for coming to my live. So there's a lot of other indicators. We're not going to look at all of them today. Let's go to the next one. So you can understand what I'm saying so far. You have any question about that specifically? I'm not going to answer all your questions that are not relevant to the content, but I will answer relevant questions. Okay. And that brings us to number 4. And we're going to need to zoom out here a little bit, which is the OBV. Okay. In the future, subscribe to my channel. We will learn more. Okay. Because there's a lot more to learn. And I wouldn't say that what I'm teaching you are the best, the very best. The very best are very expensive. Like you have to pay a lot of money. So that's one reason to follow my channel. Make sure you go to our channel and subscribe. Okay, go to YouTube, and then we're giving free money as well. So go back and pay the $60. You can get $60 on Thursday if you subscribe. Make sure you subscribe to our channel. Okay, let's go to OBV. This guy thinks I care about 1,000 for just $10. I really don't care. Okay, it's not the purpose. We're not looking for that. Okay, thank you. All right, let's go. What is OBV? OBV is an indicator that uses the volume flow of an asset to predict price changes to determine how strong signals are to buying and sell an asset. Okay. The volume flow is another factor because you may have change in the chart, but the volume flows, you always need to look at that. Why? Well, because OBV gives you the most reliable feedback around the test of a major highs and lows, making it perfect tool to measure the potential for breakout and breakdowns. Okay, so what do we mean by that? Well, to understand this, first of all, we need to go back and look at the chart, okay, and type in, let's get rid of a few things here. OBV. Okay, so you're going to type OBV, on balance volume. Okay, and there it is, going to tell you what's going, but we shouldn't be looking on the 1 day unless you're thinking long term. Okay, let me see your question. The 10-day, that was, okay, so let's quickly answer that because I want to answer questions before I teach you this. So let's get rid of that. Let's go to the tools, the indicator. Go back to this. The black line is the 10-day moving average. 10-day. Okay? You could change those, by the way. You see 10 here? You could change those. You could change the amount of time. But generally we don't. There's 20, 50, and 200 are the most important ones. Okay? It depends on your strategy. I look at the charts many times a day, especially now because I'm in profit. Like, as I explained, right? Like, I bought at the bottom. So let's go to the 4-hour view. Okay, let's get rid of this. So I bought it, actually it's probably better going to 1 hour. So the other thing you want to understand, right, is when you're in profit and there's a potential, as we're moving sideways here, guys, you see, I bought here, yeah? So I went all the way up, correction, I kept it, up, correction again, I kept it, and I kept it. I could sell, but I didn't. Because if I sell and it goes up, then I have to buy it at a higher price here. So I want to be careful about that. So if you don't check the chart and then it goes down, oh, then you lost your profit. Oh, I see. You cannot have more than 3, right? Okay, I see. Well, keep following my channel. I will keep. Anyway, if you go to my Telegram group, I consistently post the charts there. So even the premium ones, which you don't have to pay. Okay. Don't worry too much about that. Just we're looking for the moving average. Okay. Okay, we can, okay, 1, 3, thank you so much. You're welcome. Okay, thank you for that. I appreciate it. Okay, let's explain. Okay. One strategy is if we see that it's a downtrend, sell it first and buy it again at a lower price. Yeah, I agree with that. The problem in my experience is a lot of times you think you have the right price, right? Like you think it's a downtrend, but you're wrong and you miss it. So that's why I don't like trading too many times. Like right now, let's say it does this. Like when it came down, I'm like, you don't think I get a little bit like nervous? Of course, because if it keep going down, right, I should sell. And then you put a stop loss and you get a wick. A wick is one of those lines. Sometimes the wicks are very long and your stop sell gets activated, but it bounced right back up. If you're sleeping and you didn't put your alarm on, I put alarms while I sleep, so I don't miss it. Okay, especially now because as I get in higher profit, and we are definitely out of this hole. We're not out of the hole yet, guys. We're still in this hole. You see what I'm saying? We're still not out of this correction yet, because it could still go down like this and then bounce back again. So yes, it's correct that I try to sell it if it goes down and then buy it again here. But you cannot be wrong when you do that. If you're wrong and then the price goes up, you have to pay a higher price. So there's a lot of risk. I don't know, man. Like, you may not see the risk, but when you're trading with a lot of money, you feel it. Like, you can lose Bitcoins, you can lose Ethereums, by just a little bit. I've experienced this. Why I think it's going down, so I sell. I'm wrong. It goes up. I just lost a lot of Ethereum and Bitcoin. Like, you literally lose it, because when you own the Bitcoin, it doesn't matter if it goes down. You still own the same Bitcoin, the same Ethereum, the same altcoin. It's still yours. But when you screw up and you think it's going to go down, but it doesn't, and you missed it, now you have to buy it back, and you get less Bitcoin, less Ethereum. So it's always very risky to sell it. I'm looking for a really strong signal that it's going to go down. Really strong. I'm not going to risk it, because I like to keep my Bitcoin. Okay. So, but anyway, let's take a look at it, right? Because we're in a 1 hour, right? Okay. So one of the reasons that we are looking, okay, is the trend. You see, like, it is a trend change. It's showing you, right? It's showing you that's part of the reason. Based on volume and based on this, we do see a trend change, okay? And what I mean is, like, you got to put the lines on the top. When you have the lower low and a higher, a green candle is like lower, right? A lower high is called, and a lower low, it's a beginning of a trend change. But you cannot judge that on one candle. You have to look at the overall pattern. What I mean by that is that, like, if you judge by here, it's like that candle, the second one is lower, right? It's lower than that. Let me zoom in. Let me zoom in. I don't think you guys can see that. So let me zoom in. Okay. So what we can see, right, is that this candle lower than that one. So it's technically a lower low. And then we get but sometimes, and then you see like a green candle here, a lower high. See, like here, it's this one. But at closing, anyway, it closed there, and then it closed there. So it's a lower high. See? Then a lower low. So it seemed like, oh, the trend is changing. But it's not. It's just, that's why you don't want to react to 1 hour at a time. It just doesn't make sense. So for that reason, how do I get out of this position now? Hold on. Actual size. For that reason, because of the way that movement works, right? We are looking at the overall pattern. But if you look at this, right, and it doesn't, like, if it doesn't start going up and keeps going down, well, then you know, based on the breathing in, breathing out, breathing in, breathing out. This is so small. Let me correct that. Okay. Auto. So we have to go in and look at it like this. So let's look at this one because it's much easier here. It's breathing in, breathing out, breathing in, breathing out, breathing in, breathing out, breathing in, breathing out, breathing in. But if the overall pattern is going down, then what this allows you to see based on the volume, because sometime this one will go up and that one's going to go down. And you think, wow, this one's going up. It's an uptrend, but that one's going down, and that's not good. It's not good. Both of them have to go up at the same time. Okay? Otherwise, it's mean that the volume has changed. This is the volume, the amount of people buying and selling. Okay? That's what it means. So, for example, right? We could, if you look at this one here, is probably a good example, right? It's going up, right? But if you look at the one down here, right, it's not going up the same amount. One is going up, one is going down. They're probably not equal, right? Probably if you look at, you wouldn't look at it like that. You would look at it like this, something like this. Let's say we have the same length. So you see, one is going up, one is going down. Yeah, that's not good. If both of them are going up, it's good, right? Like both of them are going up here. See? So both of them are going up. That one is going up. So when both of them are going up, it's a good sign. But if one is going up, one is going down, it could be a warning that something is going to happen, like a crash, like a correction. I wouldn't call it a crash, right? Okay. Okay, guys, that's pretty much it for today. Any questions? I will answer this question, of course. Yeah, I mean, you're talking the head and shoulders pattern, right? I mean, yeah, it looked like that, right? Oops, sorry, that's not a good drawing. It looks like that. There's a shoulder, there's a head here, there's a shoulder. But a lot of time, what we're really seeing is it's not a head and shoulder. It's because there's a strong support there and a strong resistance. So that's what's going on. And so that's why, like, head and shoulder, you have to understand the other indicators to look at it, in my opinion, right? So, for example, we go back to this, right? If we look at the 1 day, we hide all the drawings here, okay? You can see that the problem is not the head and shoulder. The problem is there's a really big resistance on the 20-day, meaning it's got a hard time to break through, right? It needs to break through. That's what we need to do to get out of this. If we don't break through, we are at risk that we go back down. That's right, a divergence, right? Okay, but keep the language simple for now. But we can see that as long as we have this 20-day moving average as a resistance, we're not going anywhere until we break through. Once we break through, then wow, okay, we can. So we're at a risk right now. You see what I'm saying? Like we face a risk because this is the risk. We have not broke through, okay, and we're facing that risk. All right. Okay, so anyway, I'm not going to answer all your questions, but I hope you enjoyed what I shared with you guys. Start practicing using these 4 indicators. The risk, what am I talking about? I'm talking that it has to break through here. For us to be this, if we break through, let me explain one other way. If you break through this 20-day moving average, which is the green line right there. Okay, let's get rid of all this stuff again. All this drawing. Let's auto. Okay. Okay. So zoom out. Okay. This is the 20-day moving average. Okay. Right there is the 20-day MA20. Okay. Oh, cannot see it. Not quite sure what I'm talking about, so I would explain it. This is this line, green line, 20-day moving average. Okay. Right there. That's the 20-day MA. This red line is the 50-day moving average right there. Okay. So we are facing a resistance. That's what's going on. It's been trying to go there yesterday. It's trying to go there today. It's not breaking through. There's a resistance. If we break through, then we'll be better probability to be out of the correction. However, it could change at any time. That's why I watch the chart a lot, because if it starts going down, I may choose to sell it. If I'm confident it's going to go down, then I'll buy it again at a lower price. Am I confident right now? Not enough, so I'm keeping it. For sure. For sure. I don't think anybody can tell you 100% certainty. Okay? So we have to break through this line here. That's what this means. If we break through, then we're probably going to be on our way to, well, we have to look at other tools, but we'll be on the way to at least 54,000. I would say that, at least, right? Probably more. We could be on our way. We could be out. We could. It depends if it moves sideways or not. But if there's a lot of good news, we need more good news. We need Elon Musk to say something nice. You know, not that the price seems kind of high. That doesn't help us, right? That doesn't help. Well, this is Tradingview, which I've already answered. If you look here, I've already put in the comments, tradingview.com. Some of it is free, but some of it you have to pay. But anyway, I use a lot of software, not just that one. Okay, guys. Well, go meditate, go have a shower. I'm done anyway. Thank you for joining me, guys. Please if you enjoyed what I shared with you tonight, please press the like button, and if you like it, come subscribe to our channel so I can give you more information. Go to YouTube and feel free to subscribe if you really liked it. I will come back and give you more information. I did predict a crash. I did buy it at the bottom, and so I am in trades right now, and I am profitable. So, and the way that I did it is I look at many factors. I hire all the best experts as well to coach me and teach me, so I can teach you, and I do it for free. Okay, at least for now. Okay, guys, see you. Thank you, everybody. Live in a beautiful state as always. I'll see you in the next session. Beautiful state. Bye for now.